Hi guys, John here, Mr. Forex Fire. And first of all, we're going to be going over the Forex Fire 1 minute scalping method, okay? And sort of what I want you guys to sort of look for, how I look at it and how I implement it and when it works best, okay? So there's a few things to go over for that at the moment, okay? So I'm just going to take a cup of tea. Very nice, right? So I'm just going to share my screen and I'm just going to explain a few things, okay? So let's minimize that. Let's get the path. So as you can imagine, again, we have price, okay? Price can either move up or price can move down, okay? Just bear with me 2 seconds. Just make this a little bit bigger. So, yeah, price can move up or price can move down. Price can move sideways because this is called consolidation. However, you tend to find it'll move within a range like this, okay? However, from time to time, you get that impulse move, whether it's on the upside, whether it's on the downside. And as we come out of the consolidated area, an accumulation, if it's on the downside, we will start getting pullbacks, okay? And then price, if it's a continuation of trend, it will break the structure of the high that it's produced. Then this will become a higher high from this high, okay? We get a pullback, okay? You may come into a zone. So what will happen is generally, once you make a high and then a low a high, okay, you want to zone these areas off, okay? Because over time, these will cause trends. Now, as the trend continues, if it's a continuation in trend, your price, when it pushes back up, will break structure of the last higher high, which it does here. We will then get a pullback either into this zone here, where, let's get rid of that, where if you do, you are basically zoning off a new area, okay? And we would just move this to this area and delete that, okay? So as you're moving up in price, okay, this is your new zone. So basically what will be happening is as price comes back into a zone from a break of structure, okay, whether that break of structure, just take a look. We need to get the eclipse. When you've had a break of structure, from there, when it's reversed down, it's broke that structure there. When we get the pullback from this point, okay, we are basically looking for a candle, okay. In this instance, it would be the last down before the last down before the up maneuver. Why? Basically because what we've got is structure or an order block, a price, a contractual area, okay, where price will reside. And the only way where this will become an invalid area for anything that is of an entry is if price breaks through. If price was to break through this area, okay, if price was to break through this area, you are then invalidating the uptrend, and you'll be looking for the reversal candle, which would then become the last up before the down. Okay, so again, zonal points, you get the push up on this pullback here, just to make sense. As you broke structure of this area here, which we've done here, the buys have been in control, and we come down. It's not until we come past this point, okay, the last high, we are then looking for an entry to bounce off the last lower high constructive area to bounce and then give us a continuation where the TP area, what we would aim for is then that the initial pullback. Okay, I hope that bit makes sense. I'm going to try and give you a bit more sense in this as we look on this. So this is how I generally work this on a morning. Okay, I'll get up 7 in the morning and I'll look for pairs and I'll work from around about 8 a.m. Okay, now as you can see on here, we've had a shift of momentum. There's been a consolidated area. You could say that's a consolidated area. We had a breakout, but then we've come back to retest this area, and then it's pushed up. Okay, so if we, after 8 a.m. is when I generally start. If we look into here, okay, so what we've had is this area here previous, and if we just highlight this, okay, and we put this line along here, okay, so that's that there. We'll just make that black, make it a bit thinner. This here is where we would be looking for the BOS. Okay, the BOS is just meaning a break of structure. Okay, that break of structure came here. Okay, so we would be looking at an entry of around about the last down, the last down before the up. So the last down before the up candle is generally this here. However, I would have possibly incorporated that. Didn't quite enter. Excuse me. So then we are just basically moving our areas up to where that break of structure came. Okay. And then we will be waiting for a break of structure here. Okay, waiting for a return. Obviously didn't come. Break of structure. Didn't come. Well, you got the break of structure here. It wasn't until on the break of structure standpoint, because these 1 minute charts, they'll throw so many of these at you. Okay, you're waiting for that break of structure there. Okay, for the liquidity. You've got it from that standpoint. Okay, so what would happen here is you would have this candle, the last down before the up. That is your stop loss. That is your take profit. Okay, you are in and out within 5 or 10 minutes. You've got a 1.68 growth. And as we move up, okay, this is the new high. The TP area was hit. You can see you had a break of structure here. Okay. You are then looking at the entry, and I hope you're following along with this, the entry of this candle here. You've got the entry That's your stop. Your TP is going to be that area there, because that's where the break of structure happened. Risk to reward of nearly 1.5. Okay. You are now waiting for a break of structure of this area. It's happened here. Okay. So your last down before the up is that there. Okay. You can see long position. That's your area. That's where the stop loss is. The TP or the break of structure occurred here. There's a 1.8. In and out within seconds, in and out within minutes, to be fair. From there, you are waiting for the break of structure of that area. Okay. That meaning that there would then become the candle. The break of structure occurred here, but it's not pulled back. Okay, it's not pulled back. So when that happens, well, let's just add these up. Let's add these up. So if we go onto here, we've got the calculator. Right, so we've got a risk to reward 1.68. 1.68 plus 1.49 plus 1.82 1.82 plus 1.49 and then a 1.68 plus 1.68. So there's a growth. There's a growth of around about 5% done within 51 minutes. That's fantastic. Okay. And you're basically, all you're basically doing is finding the trend. Okay. You're finding the trend and you're working with each of these pullbacks. Okay. Now, I hope that makes a little bit of sense. I'll leave the video there for now. I'm going to set some homework with these and I'm going to talk a little bit more about fire zones and how we can implement certain structure with fib zones and working alongside this to sort of look for extra confluence for where we may have a trend reversal and other things. Okay. So just give this a thumbs up if you found this a little bit insightful. I may have to do 1 or 2 other steps on looking for this. I'll do 1 or 2 other videos to go alongside it and we'll take it from there, guys. Okay. Thanks very much.